Hedge funds are starting to be margin called, and this could be the start of something historic. By now, I'm sure you've heard that Archegos Capital Management is getting margin called for somewhere between $20 and $30 billion. Yes, that's right, billion dollars with a B. The banks are calling up. They're saying, all right, it's time to liquidate your positions. You've got to get us our money back because you're busting on your margin. But you might be sitting at home wondering, why aren't my shares of AMC jumping? Why aren't my shares of GameStop jumping right now? I thought AMC stock was supposed to rise when these margin calls started to happen and these hedge funds started to break. So in this video, we're going to talk about what's going on here with Archegos Capital, what's going on with AMC, and whether or not this could be the start of the short squeeze. So if it sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. We're growing our portfolios together, and we're just growing together. If you haven't subscribed to the channel yet, make sure to hit that subscribe button. We've got videos every day, and the goal is to grow our portfolios. So let's talk about what happened here, because I know there might be a lot of people wondering if it's the start of AMC getting ready to squeeze, if GameStop's going to jump, what's going on? So here it is in a nutshell. Basically, if you're reading all of these articles that are coming out about the hedge fund Archegos Capital Management, it might seem a little bit confusing. And I think that, analysts and I think that the media wants it to be a little bit confusing, but we're going to break it down and we're going to make it very simple. So what Archegos Capital Management was doing is they were selling what's called CFDs, or contracts for difference. And a lot of articles, they're going to make it seem complicated because people want to make finance complicated for some reason when it's really not. All you're basically doing is buying and selling. You're making money. So let's break this down. Contracts for difference, or CFDs, are exactly that. They're contracts for the difference of price at a future point in time. So let's use AMC stock as an example, and then we'll get into it a little bit further, but what was going on here. So say they said, okay, I think that AMC is going to be trading at $20 per share in the future. Let's set a date. Let's say at the end of March, right? So since it wasn't trading at $20 per share in the future, the banks get their money back. They say the hedge fund went out and said, yes, I think it's going to be 20, and the stock's trading at 10. Right? So they owe the bank the difference for that $10 per share. It's very similar to options, right? With an expiration date, with a strike price, with expiration price, all of that stuff that goes into it. And, they can make them sound as complicated as they want, but basically they're saying that I owe you the difference if it closes above, you owe me the difference if it closes below. That's all that is in a nutshell, and then they leverage it out. And a lot of people get confused by leverage too, but it basically just means, okay, I'm going to bet $100 on this, but it's worth $500 worth of that asset or worth of that security, right? So it's like any type of credit. They just go out there, they actually spend $100, but they're getting $500 worth. So that's it in a nutshell. They went out, they leveraged these CFDs, and those CFDs fell short. Right? They did not make money on it. So what they had to do, they're getting margin called, and then what they had to do was go out and cover their positions. And the banks that were allowing this leverage and allowing all of this to go on and lending out this money, they had to sell off their underlying positions in these stocks, and that's what drove these stock prices lower on Friday. So you might be wondering, is this a short squeeze? Is this related to AMC stock? Are we going to see AMC stock jump in price because of this? Unfortunately, the answer is no. Archegos Capital Management was not shorting, or at least what they're telling us, was not shorting AMC stock, and they were not shorting GameStop. They were really playing around with these CFDs, and that's what got them in trouble because of the leverage and because of really the fact that they were making bad investments, right? It was just that. So they had to go out there and they had to sell off these positions, and that's what caused all these stock prices to go lower on Friday. It wasn't a short squeeze. See, the difference in a short squeeze is when these margin calls start to take place on short squeezes and these hedge funds are forced to go out and buy the shares. That's when the share price rises higher. When the hedge funds are using instruments like CFDs or other leverage tools, the share price will go lower because they have to go out and sell them off. There's a huge difference. It's the exact opposite, okay? So look, here is the silver lining. We know that the bank, at the end of the day, everybody wants their money, right? Banks want their money, hedge funds want their money, retail investors want their money. The goal at the end of the day is to get your money and make as much money as possible, and these banks know it. So here's what's happening, and here's what I'm excited about, okay? So unfortunately, yes, the AMC stock did not rise because of Archegos Capital getting a margin call for $20 billion. In fact, $35 billion was erased from total worth in the stock market on Friday because of all of the margin calls that took place. Now, here's what I'm excited about. Banks want their money. Okay, it doesn't matter how much regulation is out there. It doesn't matter what governments are doing. At the end of the day, if the bank isn't going to get the money that they lent out to these hedge funds, what do you think's going to happen? They're going to get their money, right? They're not going to let it go. You can sit there and say that everybody's conspiring together and everybody's working together to stick it to the little guy, and it's probably true. Right? The bigger you are, the less you care about the little guy. But at the end of the day, nobody is going to let somebody else screw them out of billions and possibly hundreds of billions of dollars. So when it comes time for stocks like AMC stock and GameStop to be margin called, it will happen. And here's the major difference between what we saw on Friday with the margin call and what we're going to see with GameStop and AMC when it becomes margin called. When GameStop and AMC get their margin call, the stock price will soar. Okay? Now here's the difference, and this is what everybody needs to get into their minds and everybody needs to remember. In the face of all the corruption, in the face of all the conspiracies, in the face of all the regulation, all we have to do is hold the stock. That is all we have to do. If it goes down, all we have to do is hold. If it goes up, all we have to do is hold. And it's very simple. Why? Okay? It's very simple because if we hold the stock and nobody is willing to sell it, the hedge funds will have to offer a higher and higher and higher price. It's completely different. The hedge funds have already sold their positions. A lot of people think, well, they can just continue selling. The hedge funds have already sold their positions, so they are obligated to buy it back. So as they continue to offer that price, and they raise the price if you hold, and they raise the price, you say no, they raise the price, not today, and they raise the price, and you just sit there and ignore them until the price literally goes to the moon. They will get margin called at some point because the banks know. The banks are saying you will absolutely not lose our money. Okay, let's think about a hedge fund for just 1 second. I know this video is going a little bit long here, but let's think about a hedge fund for just 1 second. A hedge fund invests other people's money, right? Banks loan them money. Who do you think's bigger? Do you think the bank is bigger than the hedge fund? The bank is absolutely bigger than the hedge fund. Now, when the bank feels like their money's at risk, what are they going to do? If you owe the bank money on your house, what's the bank going to do? They're going to come and take your house from you. If the hedge fund owes the bank money, what do you think the bank's going to do? They're going to come liquidate the hedge fund and get their money back. The bank is not going to lose their money on this. It's not going to happen. They've got too much riding on it. So when the price finally reaches whatever the price is, okay, there's no magic number. Everybody, you can get PhDs out there, all of these smart guys to do all the math in the world, but there's no magic number. AMC has to reach $30 per share before the short squeeze happens. No, there's no magic date. Okay, it's a short sale. It's not like it's just options. There's no expiration date. Okay, they could play around with this at $10, $20 a share for eternity. That's just a fact. That's how shorting stock works. They're obligated to buy it back, yes, but they're not obligated to buy it back at a certain date unless they become margin called, right? That is the only thing we need to worry about. So you're saying, well, we can sit here and hold it to the grave, right? And that might never come. True. But that's if people continue buying and selling all day. If they're buying and selling all day and the stock price is going down and up and down and up and it never moves. But if you buy the stock and hold the stock, people have to continue offering a higher price. It's just how it works. They offer a higher price, and then eventually when that price becomes high enough, the banks say, absolutely not. We can't take this anymore. Give it back. We are margin calling you right now. You are busted. That's it, guys. The strategy is to hold. Now, look, if you're not comfortable holding, don't take this as the holy grail of advice or anything like that. I'm just saying that that's as simple as it is buying the stock and holding the stock and fielding those offers, letting those offers come in. Offer me, offer me, offer me more, offer me more. I'm not going to accept it. Offer me more. I'm not going to accept it. And then the short squeeze can happen. It is as simple as that. And look, this isn't me telling you to hold the stock forever. This isn't me telling you to go out and bet your house on AMC. If you've got one share and that's what you're comfortable with, if you've got whatever you're comfortable with, okay, at the end of the day, it's your investment. It's what you feel comfortable doing, and it's what you know is right, okay? But that is how the short squeeze works. I just want to make sure that everybody knows that, and it's going to be different than what we're seeing with Archegos Capital Management. It's going to be completely different because the stock price rises during a short squeeze. When these hedge funds get called on AMC stock, when they get called on GameStop's stock, guys, it's going to be a beautiful thing. Right? If you thought it was crazy before, it's going to be a beautiful thing. So keep that in mind moving forward. It's different. It's not related to Archegos, no, but the banks are out there and we know they want their money and we know that people are being margin called, and that is the silver lining on the playbook, boys. That is what we want to see, because we know in the face of all the regulation and all of the corruption, everybody wants their money, and we know that for a fact. Nobody wants to lose their money, even the guys that are in charge, right? So keep that in mind moving forward. Let us know down in the comments below what you guys think. If you're getting a little excited that this thing could finally be happening, if banks are realizing that, yeah, it's time. It's time, no matter what it is. And if you think the buy and hold strategy is all we need to do to see these stocks short squeeze, let us know down there in the comments below. If you have not participated yet, there's a link down below for Webull. It is super simple to set up your account. You're going to get a couple free stocks just for setting that up and for depositing at least $100. And they are giving away free shares of AMC stock. So if you want to join the movement, but you're not exactly sure that you want to go out and buy that stock yet, go ahead, sign up for Webull, make that deposit, and you could have AMC stock in your portfolio absolutely free. And guys, if you want to share this video, you can do so almost anywhere. Please tag me at Claybro. I would love to follow you guys back and see what everybody's interested in investing in. And look, guys, subscribe button right there. If it's still red, you got one shot left. Subscribe to the channel and become a bro and catch us here every single day. Now, until the next time, I hope that each and every one of you have an awesome day.